Okay, let's go.
All right, let's dive into a topic that drives so many traders absolutely nuts. It's this frustrating puzzle that can make you feel like you're taking crazy pills if you don't understand what's really going on. Have you ever had this happen? I mean, really, think about it. You call it perfectly. You say the market is going to go up and you place your trade, and then at the end of the day, the market did exactly what you said it would, but somehow you're down money. It's maddening, right? Well, today, we're going to pull back the curtain and see precisely why this happens. So here's the heart of the mystery. Let's imagine two traders. We'll call them the common trader and the pro trader. Now, both of them look at the same chart. They have the exact same idea, and they make the same correct prediction. But look at the results. One loses money, and the other makes a nice profit. How on earth is that possible? To solve this, we're going to do something fun. We're going to follow both of them side by side through the exact same trade. We're going to watch every single decision they make, see how it affects their bottom line, and pinpoint the exact moments where everything changes. This is where a winning idea goes so wrong. Okay, so here's the scene. The market's been dropping, and it hits a really important support level at 21,500. This is a price where historically buyers tend to jump in. Both our traders see this, and they both think, this is it. This is the bottom. So they do the exact same thing. They go long, which is just a fancy way of saying they bet the price is about to go up. They even put their stop loss, that safety net to get them out if they're wrong, at the very same price. At this point, they are identical. And here it is, the first moment of truth. The market does a little head fake. It dips down and it gets uncomfortably close to their stop loss. The common trader, they start to panic. That little voice of fear kicks in. Oh no, what if it keeps going down? And boom, they hit the button and take a small loss. But the pro does absolutely nothing. Their plan is crystal clear. The stop loss wasn't hit, so the reason for the trade is still valid. They just hold on.
And what do you know? The market turns right back around and starts heading up, just like they predicted. Now the common trader is sitting on the sidelines, watching the move happen without them. And that terrible feeling kicks in. FOMO, the fear of missing out. They're thinking, I was right, I need to get back in. So they jump back in, but at a way worse price. And the pros? Well, they're just calmly sitting in their original trade, which is now starting to look pretty profitable.
So the price keeps climbing, and the common trader's second attempt finally gets back to where they started, covering that first little loss. And what do they feel? Not excitement, but relief. They think, phew, okay, I'll just get my money back and get out before something bad happens again. So they close the trade for zero profit. Meanwhile, the pro is actively managing their win. They're moving their stop loss up, locking in gains, and ensuring that even if the market turns, they're walking away with money. The market powers ahead and hits the price target. It was a great move, but the common trader, who completely missed it, now makes their final fatal mistake. They look at the top and think, okay, this has gone up too far, it has to come down now. And they start shorting, betting against the very trend they correctly predicted in the first place. The pro, on the other hand, simply closes out their position at their planned target, banking the maximum profit. Plan complete. So let's just look at the final scoreboard here. And wow, it is brutal. The common trader, who was 100% right about where the market was going, ends up with a significant loss. They've also paid a ton in brokerage fees for all that jumping in and out, and emotionally, they're just wrecked, frustrated, confused. The pro, one trade, low fees, a big profit, and they're as cool as a cucumber.
Now this story shows us exactly what happened. But that's not enough. We need to understand why. Because clearly it wasn't a bad idea, and you can't blame the market for doing what you thought it would do. So what was the real enemy here?
Let's really pause on this for a second. In that whole sequence of events, where did the failure actually happen? Who or what is the real reason the common trader lost money?
I mean, you know, the usual excuses, right? Oh, my strategy was bad. Well, no, it wasn't. The pro made money with the same idea. The market is manipulated. Nope, it did exactly what you both predicted. Was it big money hunting my stop? Or I just don't have enough capital? No, no, and no. None of those typical scapegoats fit here. The real problem is something much closer to home.
And there it is. This is the single most important lesson in all of trading. The problem isn't out there on the screen. It's right between your own two ears. You are the obstacle. You are the devil in your trading account. It's your fear, your FOMO, your impatience, your lack of a plan. That is what turns a brilliant idea into a losing trade.
Okay, so if we're our own worst enemy, how the heck do we stop sabotaging ourselves? The answer is to build a professional mindset. It's like a set of armor built on a few core principles that just override those gut reactions and destructive emotions. So let's look at 3 rules you have to live by.
This is rule number 1, and it's absolutely crucial. Success in trading isn't about your win rate. It's not about being right 90% of the time. It's about making sure that when you win big, and when you lose small. Your goal is asymmetry. You want to risk $1 to potentially make 5 or 10. That's the whole game.
This just cuts right through all the noise. You can tell all your friends that you called the market perfectly, but if your account balance went down, who cares? It's an empty victory. Bragging rights don't pay the bills. The only analysis that matters is the one that you actually turn into cold, hard cash. You've probably heard this a million times, and our story shows you exactly why it's the gospel of trading. The pro was ready to take a small planned loss, but they gave their winning trade all the room it needed to grow. The common trader, they did the exact opposite. They cut their winners short because of fear, and then they essentially let a losing idea, the short trade, run on nothing but hope.
All right, knowing these rules is great, but putting them into practice when the pressure is on, that's the real challenge. So, let's wrap this all up with a super practical 5-step plan that you can use for every single trade. Think of it as a way to go from emotional chaos to disciplined clarity.
Seriously, treat this like a pilot's pre-flight checklist. 1. Define your view. Why are you even taking this trade? 2. Set your risk versus reward. Know before you get in exactly how much you're risking and what your target is. 3. Plan the nitty-gritty details of your execution. 4. When your moment comes, you pull the trigger. No second guessing. And 5, and this is the hardest one, once you are in the trade, your job is done. You don't touch it, you let the market decide. It either hits your stop loss or it hits your profit target. End of story.
And that really brings us to the final, most important question. The market is just going to do what it's going to do. The real difference between winning and losing isn't in some magic indicator. It's in managing yourself. The plan is your weapon, but you're the one who has to wield it with discipline. So, the choice is ultimately yours. Will you keep being your own biggest obstacle, or will you finally become your greatest asset?